Hey everyone, this is Dan. Let's talk about what's going on in the stock market in the last few weeks and what we can do to prevent from getting wiped out. As you probably know already, SPY representing the movement of S&P 500 peaked on February 19th and has dropped 10% already. And QQQ representing the movement of NASDAQ 100 is in even worse shape. It has dropped 13% from its peak since February 19th. If the market continues to go down, what stocks should we buy and what should we sell so that we don't get wiped out? Maybe if we do the right things, we can possibly be making a profit while the market is going down. Let's talk about how we might be able to do that. First of all, let's try to find a few stocks that have been performing fairly well recently. We also want to know whether these stocks have been holding up during past market crashes. I decided to look at the following 29 stocks. Why do I pick them? That's because some of them are very well-known stocks that have gone up a lot recently, such as Nvidia, Meta, and Microsoft. This list also includes Berkshire Hathaway, which is Warren Buffett's company. It also includes Costco, Walmart, and McDonald's. I included some other stocks on this list because they are either already in my portfolio or maybe because some of my friends recently recommended them to me. What I want to do is to check out the historical performances of these stocks against a few time periods that I consider to be representative of how the next few months might unfold. Of course, we have heard the line that historical performance does not guarantee future return, etc., etc. But having some historical perspective is still very helpful. I picked the following time periods. Definitely the financial crisis, which lasted from October 1st, 2007 to March 1st, 2009. And this period, which is roughly a year and a half, is a time when the market was dropping. Then the market started to recover shortly after March 1st, 2009. But I want to really understand how a stock is performing during the time when the market was crashing. And then, of course, the 2015 crash, which lasted from April 1st, 2015 to February 15, 2016. And then the Fed rate hikes in 2022. And then there's a short period of market correction, what I call the 2023 correction that happened in the later half of 2023. And then, of course, a pandemic crash, which lasted only about 3.5 months. But nevertheless, it was a pretty dramatic crash. And then, of course, generally speaking, the performance of a stock in the last 5 years and the performance of a stock since 2023 and the performance of the stock in the last year. When I line up the performance data for the different stocks and ETFs, for example, for SPY, the ETF representing S&P 500, during the financial crisis, it dropped 52% from its peak. That was certainly a market crash. And QQQ representing the NASDAQ 100 dropped 47%. And during the 2015 crash, SPY dropped 9% and QQQ dropped 7%. During the 2022 Fed rate hikes, SPY dropped 25%, QQQ dropped 33%, and 2023 correction, SPY dropped 5%. During the pandemic, SPY dropped 23%. And then in the last 5 years, SPY went up 93%. And since 2023, SPY went up 46%. And in the last year, SPY went up 6%. And then if you look at Berkshire Hathaway B, during the financial crisis, it went down 35%. That means Berkshire Hathaway actually performed better than SPY and QQQ, which went down 52% and 47%. During the 2015 crash, Berkshire went down 11%, which is worse than SPY and QQQ. But during the Fed rate hikes, Berkshire Hathaway went down only 11% when SPY went down 25%. So Berkshire performed pretty well in comparison. And during the 2023 correction, SPY went down 5%, whereas Berkshire went up 1%. Definitely that's a positive for Berkshire. And pandemic, SPY went down 23%, whereas Berkshire only went down 19%. So if I average the numbers during the 5 crashes, I arrive at this number I call the market drops average. For SPY is 23% negative, of course, because it's a market drop. And QQQ is 21% decrease. Berkshire is 15% decrease. Apple is 22% decrease, and McDonald's is only 7% decrease. Not surprisingly, McDonald's held up pretty well during bad times because McDonald's is not a luxurious dining experience, so people generally don't cut back on their budget going to McDonald's even during market crashes. And that's why, generally speaking, McDonald's holds up well during market crashes. The same with Costco and Walmart. And then if we look at all the stocks that I've selected, 29 of them, I put the results in this table. Look at the average market drop during the 5 different crashes and the performance of each stock during the last 5 years since 2023 and in the last year. But I want to boil it down to a ranking number for each stock. So I devised a weighting factor for each of these 4 columns. For example, because I'm really concerned about a possible market crash for 2025, that's why I give the weight of 2 for the market drop. To get a picture of the performance of the broad market for these 4 columns, I average the numbers for SPY and QQQ for each column. That's right, for the market drops, the broad market average out to be 22% drop for the last 5 years. The market average is 124% increase, and so on. So for Costco, for example, if Costco performed better than the broad market during the market drops and it performed 10% better, then I multiply the 10% with the weighing factor of 2. And then for the last 5 years, if Costco performs 20% better than the market, then I multiply the 20% by a weighing factor of 0.3 and arrive at a number for the second column for Costco. So I calculate a number for each of the 4 columns for Costco and add them all up, and I arrive at this composite score for Costco. And the reason, of course, I want to give the market drop column a factor of 2 is because I really want to protect my investment just in case there's indeed a market crash in 2025. And of course, for the last 5 years, that's an older period than the current 1 year period. That's why the 1 year has a weighing factor of 1, whereas the last 5 years has a weighing factor of only 0.3. Now, the reason why the market drop has a negative 2 factor is because market drop work in the other direction. It's a negative, that's why I have to use a negative number to counterbalance that. But after I calculated all the columns for all 29 stocks, I arrive at this column with the scores. And then I rank the scores from the highest to the lowest, and I arrive at this table. I keep the SPY and QQQ on the top, and they have a score of negative 0.21 and 0.21. NVIDIA, interestingly, has a very high score of 12.40. Let's look at the details. NVIDIA is at the top of the list. That's because NVIDIA has been going up so much in the last year and also in the last 5 years. NVIDIA actually performed just about the same as the broad market during the crashes. The dramatic price increase of NVIDIA pushed the stock to the top of our list. TMUS, or T-Mobile, ranks very high also because it has gone up a lot in the last year and in the last 5 years. And it held up pretty well during market crashes. Not surprisingly, GLD, the gold ETF, is on top of our list because gold always holds up well during market crashes. Also, gold price has been going up in the last couple of years. After gold, we see Walmart and Costco, which are consumer staple stocks that typically hold up well during recessions. Walmart and Costco have also been going up in the last couple of years because they are very well-run companies. ORLY, O'Reilly, is a seller of auto parts. When the market is down, people don't have money to buy new cars, so they buy auto parts to fix up their old cars. That's why O'Reilly performed well during market crashes. And during good time, O'Reilly is a very well-run company and has been showing good profits as well. So what are my strategies? First of all, I bought GLD, the gold ETF, already on February 20th, and then I bought more on March 13th. GLD is now about 12% of my stock and ETF holdings. My gold ETF already averaged 6.8% gain. And I also bought NVIDIA, Berkshire Hathaway B, and Meta, and I will continue to hold them. Although recently I sold NVIDIA on some of the NVIDIA shares, not all of it, on January 29th, January 31st, and March 3rd when NVIDIA was going down. I still hold a lot of shares, and I will buy more when NVIDIA starts rebounding. I bought Visa on March 27th because it's ranked pretty high on my list here. I also have been trading SQQQ, which is the inverse triple ETF pegged to the NASDAQ 100 index. When NASDAQ 100 goes down, SQQQ goes up. I've been using SQQQ to hedge against market drops, and I've been trading that quite a bit recently. I will talk about that later. And I've sold my TQQQ shares when they started to turn red because I have different batches of TQQQ shares. I usually will sell the batch before the market drop below my purchase price, so I don't end up losing money. In the next few days, I will consider buying T-Mobile, O'Reilly, Costco, or Walmart. Thank you for watching all the way here. At this point, I'd like to suggest that you follow my YouTube channel. For example, as of Friday, I posted that I just bought more SQQQ because TQQQ dropped below the support trend line established in the last 10 days. And I actually posted a picture of the TQQQ daily chart showing the trend line. On Thursday, I posted that I bought SQQQ again. And 2 weeks ago, I posted that I bought more GLD. And that batch of GLD Gold ETF already is showing a paper gain. Thank you again for watching. I'd like to suggest that you click the like, subscribe, and notification button. And as always, I welcome your comments, questions, and suggestions. I'd like to remind you that I'm not a financial advisor. I share my stock trading strategies and analyses for educational and entertainment purposes only. If you want to buy or sell stocks, you should make your own decisions, and you should definitely consult with your financial advisors before you do so. This wraps up my video for now. I will chat with you again in the next few days. In the meanwhile, I'd like to wish you the very best of luck with your financial investments.